Here's a look at the latest events happening in financial planning. Brought to you by Jennifer Lang FinancialServices.com, where we help American workers and small business owners prepare and protect their retirement portfolios from stock market loss. We specialize in annuities, 401k and IRA rollovers, indexed universal life insurance, and small business owner 401k retirement plans. Please remember to click the like button and subscribe to catch all of our financial news and retirement planning updates. Let's get started. It is well recognized among financial advisors that commercial annuities can help retirees achieve retirement income security. Both immediate annuities and deferred annuities can supplement traditional lifetime retirement income sources such as pensions and Social Security. Let's dive in. Despite what we believe, it is critical to acknowledge that annuities have a bad reputation among many consumers. The distaste for annuities is likely a result of the constant refrain heard from pundits that annuities are bad, that fees are excessive, and annuities are commission-driven sales. Nevertheless, many consumers are left with a vague and fuzzy notion that annuities are bad, even though there is nothing they can specifically point to or articulate. Today, we are going to address those misconceptions by starting with the annuity you already own and have been paying into since your first paycheck. Most people are, or will be covered by Social Security in some fashion, and most are likely entitled to a substantial lifetime benefit. Many have no idea when it's best for them to start taking Social Security, and we will offer a series of videos on this topic along with calculating tools to demonstrate how you can maximize your Social Security benefit and address the gaps in your retirement planning income. Let's start with the definition of an annuity. An annuity is a financial product that pays out a fixed stream of payments to an individual, primarily used as an income stream for retirees. Isn't that what Social Security is? A fixed monthly payment that is guaranteed by the government? Unfortunately, Social Security retirement income will, in most cases, not be enough. And that, of course, is where annuities come into play. A few retirees may be lucky enough to have acquired some pension income along the way. And that's great. But even then, most retirees will have to figure out how to monetize their retirement savings, that is, turn their assets into income. Retirees have spent a lifetime turning income into assets. Those saving and investing. And that's all most people know, how to save. But upon retirement, retirees have to reverse that process and turn assets into a lifetime of income. This turnabout is likely to be utterly alien and for those with IRAs and 401ks. Don't forget, there is a huge tax bill waiting at retirement. During the accumulation phase, most concentrate on the tax-deferred aspect of saving for retirement. But when required minimum distributions have to be taken, all of the money will be taxed. The uncertainty is, at what tax rate will it be taxed and how will inflation affect your buying power in retirement? The flooring approach to building a successful retirement income strategy has become quite popular over the last few years. Under this approach, a floor of income is built up to a level defined by the client, which is enough to cover essentials plus some cushion, or an amount above that. The floor is typically composed of 3 layers. 1. Social Security. 2. Pensions, and 3. Annuities. Social Security is the base layer of the floor, so that's where the analysis should start. Pensions are then layered on top of Social Security. Finally, annuities are added to plug the gap to the desired income level. This approach will make sense to clients when they come to understand that all 3 layers are merely different flavors of annuities. Once the retirement income floor is in place, a complementary income strategy should be devised and implemented for remaining retirement investments or assets. Such strategies include the bucket approach and the 3% or 4% withdrawal approach. Think you're all set? Well, we know from experience, however, that most are not all set, and that in many cases, the financial advisor is merely an asset accumulator, perhaps a very good one, who has no idea how to put a retirement income plan together. So the bottom line is that most retirees have never had a Social Security conversation. You need to have that conversation because it will lay out what a retiree needs for a comprehensive retirement plan. Here are some questions to think about. Has your advisor spoken to you about when you should claim Social Security at age 62, 66, 67, or 70? Has your advisor reviewed your Social Security estimated benefit statement with you? Has your advisor spoken to you about the decisions you will need to make, some of which are irreversible, regarding when to claim Social Security, how to package your retirement health insurance together with Medicare, Medigap, or when you should turn your pension on? Last but not least, the following video answers the question, how can a consumer protect the money they're counting on for retirement?
How well can I live on a fixed income during retirement? Allianz answers. When you plan for retirement, you're really deciding how much money you'll need for the rest of your life. Most people talk about living on a fixed income that includes Social Security because they're guaranteed to receive that income through retirement. And to supplement that, many people add savings of their own because Social Security may not cover all their wants and needs, and its future is uncertain. Now, you may be thinking, it seems like a good amount of money now. What's wrong with having a fixed income? A fixed income is fine, as long as your expenses are fixed too. And considering the overall trends in inflation, the money you save today could lose value over time, and that might impact your purchasing power in ways you hadn't planned. Say you're retired and you have a fixed income. For now, it covers the things you have to spend money on, like housing, food, fuel, and healthcare costs, as well as the things you want to spend your money on, like a night at the movies, a trip to the mall, or a special occasion. That'll be the case for a while, but as the years go on, you can bet your costs will go up, and meanwhile, your fixed income is, well, fixed. So then what do you do? Well, you can't avoid your medical bills, your housing costs aren't going away, and there's only so much you can cut from your food budget. So you end up having to hold back on the things you really enjoy, like trying a new restaurant you've been meaning to visit, or a weekend out of town. And what about your grandkids' birthday gifts? Sounds a lot less fun, doesn't it? If you're relying on sources that offer limited ways to increase income, there could be some tough decisions ahead. That's why you may want to supplement your retirement savings with another source, such as an annuity that provides the potential for your retirement income to increase through an income benefit. And while Social Security may offer a cost of living adjustment that can help address the effects of inflation, having an annuity that provides the opportunity for increasing income lets you do more with your savings, so you can still afford the things you have to spend money on for as long as you live. And when that income has the potential for annual increases, it's a way to maintain the standard of living you want to have in retirement, so you can spend your money on the things you really care about. That's the way it should be.
The first step is to obtain your Social Security benefit estimate from SSA.gov. Then it's time to crunch the numbers. How should you do that? Well, you can use a Social Security calculator. There are several online calculators available. These have the advantage of being free. But as the old adage goes, you get what you pay for. Numbers go in and numbers come out. That's it. But ask yourself this. Does the calculator alone show a comprehensive plan that covers tax strategies, RMDs, and capital preservation? At Jennifer Lang FinancialServices.com, our Social Security Pro was developed to fill the gap between one-dimensional calculators and full-blown planning software. It's not just a calculator. Nor is it just comprehensive planning software. Social Security Pro lets you see where the gaps in your retirement income will be, so you can quickly and easily incorporate more comprehensive planning. Click the link below to get your free Social Security report. If you are 5 to 10 years away from possible retirement, now is the best time to prepare a plan. One thing is sure. Your needs won't change. Food, utility bills, insurance, emergencies, etc. Consistently chip away at your finances. Leaving your earnings up to chance only works if you have money and investments you can afford to lose. We can help. If you are concerned about rising taxes and inflation, if you are in the red zone and you are 5 to 10 years away from retirement, if you are concerned about stock market downturns, and if you are concerned about rising healthcare costs in retirement, get your free Social Security report today. This personalized presentation clearly explains and compares filing options along with a detailed action plan. You will confidently know what actions to take, when to do it, and why. The complexity of various filing methods are reduced to a series of steps arranged by date. Click the link below to get started. If your benefits aren't enough to pay for your expenses each month during retirement, then consider other sources of guaranteed income to cover the gap. Annuities might be an option to look at. After all, they are the only thing besides Social Security that can pay you a guaranteed income for life. Contact us today for more information on Social Security claiming strategies as well as annuities and how they can benefit you. Together with our help, you can increase your Social Security benefits, maximize your retirement income, and enjoy a comfortable lifestyle with more financial confidence. You can request an initial appointment or quick call to discuss your goals, situation, and explore a working relationship. It helps to have a plan to achieve a more secure future. Get your free Social Security report today. Also, tax-deferred solutions such as fixed index annuities are safe from stock market loss and provide you with protected growth. Lifetime income. A death benefit for your family and liquidity. At JenniferLangFinancialServices.com. We work with over 25 of the top life insurance carriers to find you the best rate. Let us put our expertise to work and find you the best annuity for your age, time horizon, and goals. Get started today. Please remember to hit the like, subscribe, and share buttons to stay up to date on the latest retirement and financial planning news.